Hey guys, we're back continuing the education of all the steps that you need for home ownership. We get the questions all the time. Makes sense, we're a real estate page, right? But one of the things we pride ourselves is on our education. When we get feedback, when we get our reviews, when we talk to people at closing, they say the education. So this is really the time to take your notes, watch it by yourself, watch it with your friends, watch it with your spouse, whatever the case may be, and get educated so that you can do what thousands and thousands of people are doing with us, and that is either buying or selling their homes for huge profits. So let's get into it. We talked about income, we talked about credit. What is another thing that you're going to need for home ownership? Down payment. And most people heard the term. Most people, you can Google it, you can look up things through mortgage calculators and all kinds of things like that. But let's just overall give you the idea of how much a down payment is, how much you're going to need. But there's another part to it, which we'll get into in another video. This is a big one. This is one of the biggest factors of deciding if you can afford to buy a home. Most first-time home buyers, not all, because I have a lot of first-time home buyers that don't go FHA, but one of the advantages of FHA is they take higher what's called debt levels. Typically, a conventional loan requires 45% or less debt. FHA, they'll go up to typically 54, maybe 55% debt levels. So that's typically people because they have student loan debt, they might have car notes, they have all this kind of debt, right? Hopefully it still should be reasonable. But that particular program requires 3.5%. So no matter what the number is, and I don't say take guesses. You know what my motto has been. Anybody that's watched us, go for your pre-approval. What I'm talking about now is just general information. Mark, Kurt, Hope, anybody at the Great Homes ATL team is not going to be able to tell you how much house you can afford, which down payment program you qualify for. That is only going to be done by the person that is lending you the money, which is a mortgage broker or a bank. But in general, FHA requires 3.5% down. So just go basic math. If you think you're calculating, you're watching our page, you're seeing, oh, Mark and Kurt, they just posted a house that is $400,000. What are you gonna do? Just to see if you're even in the ballpark of being able to qualify for something like that. You're gonna multiply by 0.035. That's 3.5%. So 400,000 times 0.035. Same thing if it's 200,000, 500,000, 350,000, whatever the case may be, 3.5%. Do the math. Are you anywhere close to that? You have to ask yourself. The next program, conventional. Conventional, again, is for people that have relatively low debt levels. Probably 45%, I would say, or less. Some people actually come to the table with zero debt. Doesn't make sense to go FHA in that case. You go conventional. Also, credit score is going to be a factor. Conventional, you're probably not going to qualify for at a 600, 610, 620. From what I'm seeing, in general rules of thumb, different lenders are going to have different credit scores that require, but in general, a 680 or higher will at least get you in that ballpark of a conventional if your debt levels are 45% or less. Now, there are different conventional loan programs. There's 3%, which I would say a majority of our clients do. Then the second most popular is 5%. And then, of course, you could do 10, 15, or 20% down. Let's talk about the differences. Why do most people do 3%, especially if they're a first-time home buyer? Because you do the math again. 350, 400, 250, whatever your number is, 500,000, multiply it by 0.03. So it's actually a 0.5% less than FHA. People typically do that because they're not really cash heavy. and they still want to furnish their house, right? They have furniture to buy, they have refrigerator, washer and dryer. They may have the 5%, but they don't want to use that extra money. They want it for another topic that we're going to get into called reserves. Then there's people that they maybe have 7, 8, 10%, but they're going to do the 5% again because they want to furnish the house. Then there's people that just have money. They've been saving for this moment. They've been relocating from out of state. They've been saving for years. Maybe, there was a death in the family and money was, passed down to them, big part of home ownership is generational wealth. Those things really do happen. So they have 10, 15, 20% to put down. So in all those situations, take the price of the house you think, or just the house you're seeing on Zillow or our site or any of these sites, and you really like that house and you're like, oh, it's $450. Multiply that by 0.03, 0.05, 0.10, 0.15, 0.20. That would be 20%. Are you in that ballpark? Do you have the money? How are you going to furnish the house? What kind of reserves are you going to have, right? That is down payment. Then there are other ones where it's a high price point. Typically what you're looking at, I would say you're starting to consider this more so at $500,000, $600,000, $700,000, definitely over $1 million. Lenders are not, they're going to want to see more skin in the game. They're not going to give you that 3% or 5% option. In those situations, most likely when you get to the higher price points, you are looking at more than likely 10, 15, or 20%, maybe even 25%. That's a high-end buyer. Those are typically our buyers that are high net worth, outstanding careers, great business owners, have come from an LA, a New York, a Europe, Australia, because we have people all over the world that come to Atlanta and purchase with us. And they're coming to the table with hundreds of thousands of dollars, or an investment group, stuff like that. So that's how you calculate, and that's what a down payment is. Now, there are two more things I want to touch upon when it comes to down payment. Are you a veteran? Do you know somebody that's a veteran, a spouse of a veteran? We help dozens and dozens and dozens of veterans. They have the best loan product out there called the VA loan. You have to check with your own branch that you're in, see if you have the certificate to qualify, and a lender can help you look into that for you and tell you the steps to do that. The advantage of a VA loan is you could put money down if you want a certain payment. You've been saving up for years, you have a pension, or you've had another, outside of the military, you had, you and your spouse have saved money along the way, and you just are comfortable with a certain payment. You definitely can put money down. But the biggest advantage of it is you don't have to put money down. It could be a 0% down program. So that's why it's super popular with a lot of our veterans, active military that are leaving the military now. And again, the only reason that you would put money down at that point is because you just want a more affordable payment. But the other advantage of it, other than the 0% down, is that you do not have to pay private mortgage insurance, which you do whenever, no matter if it's conventional or FHA, whenever you put less than 20% down, you will have to pay private mortgage insurance. The benefit of the VA is that you do not. So you are saving literally hundreds of dollars in your payment, which equates to thousands of dollars a year, which equates to tens of thousands of dollars over the life of that loan. So if you or anybody is a veteran and may qualify for the VA loan, definitely have them reach out to us, because we have great lenders that handle the VA loan. And finally, the last thing I want to touch upon is People ask all the time, are there down payment assistance programs? Again, I've been doing real estate since 2003. We opened up Great Homes ATL in 2014. There are and there will probably always be some form of down payment assistance. We've had clients come to us asking, do you do NACA? Do you handle NACA? And other ones that have said and actually have done with us the Georgia Dream program. That was a program a couple years ago. And to be honest with you, because the market, when I'm taping this, has been extremely hot, that sellers are not even looking at anybody that needs down payment assistance. But in years past, I've had clients use the Georgia Dream, which in certain counties at certain price points gave you, in their hardest hit fund, up to $15,000 towards your real estate transaction. That means your down payment and closing costs, which we'll get into. What are my feelings on down payment assistance? I've heard more disappointing and horror stories of people going through programs like NACA or some kind of down payment assistance program than people that have had success. And again, I've had a few people do it and have some success. But typically, like any program, nothing is for free. There's going to be stumbles upon the way, meaning if you're not happy with the NACA or the Georgia Dream lenders that handle that program that you're working with, well, it's too bad. You have to use them in those programs. Also, typically they have to go through multiple underwriting scenarios. That means, in a typical mortgage loan, you're working with a mortgage lender, their processor, their underwriter. Well, you're working with the lender for that process as well, but now there's a second party involved. So there are double, triple, quadruple the paperwork, things not being communicated properly between NACA lenders and another lender, asking for the same documents over and over again, having to attend classes, all these things, restrictions on possibly price points or what you can buy. Sometimes, like a Georgia Dream, it's more of a grant program. It has to be your primary residence. It can't be for an investment property. Same thing with NACA, because it's promoting home ownership. Well, grant programs, like if you sell your home prior to a certain period, I think it's 5 years for Georgia Dream, you're gonna owe them some of that money back. So my overall thoughts about down payment assistance is you shouldn't be in a mentality like a Section 8 or, needing a ton of helping hands when it comes to it. Home ownership is not a right? It's a privilege. It's a stepping stone to create wealth for you, for your family, for your family's family, for great, great, great grandchildren. Like, that's the whole purpose of it. So before you would, to me, do down payment assistance, this is just my own personal thoughts, because I'm not a person. I like free markets. I like not being told what price point I have to look at, what I have to do. I just want to have my ducks in a row. So I would look at it like this. If you have to, like I did, and like I continue to do, work 2, 3, 4 jobs to save up for that down payment. Doesn't mean you're gonna have to work 2, 3, 4 jobs for the rest of your career, but do what you have to do. Look at all your resources. Can you have money gifted to you from family or friends? Can you work that second or third job? Can you pick up an Uber or Lyft job? Can you work at a restaurant? Can you host? Can you use your skills to have another line of income coming in? Do that before you're reliant on anybody else. So that's down payment. I hope that was helpful. Look back at it, understand it, comprehend it, and get with the lender so you know where you stand. All right, on to the next topic.